We're at the INSEAD Leadership Summit in Asia, and joining us is Fan Gang, a Chinese economist and a member of the Central Bank's Monetary Policy Committee. First, if we could talk about some of the issues that just came up in the session in which you took part. The issue was about regulation. Do you think that in China there is sufficient regulation?
Yes, I think as long as we can prevent the big financial crisis, and as long as we can prevent the bubbles, big bubbles, I would say the regulation is really in the place, because the financial market is, this is a common phenomena. It's very easy to get into the bubbles, overheated, and people would like to forget. And for the developing country, they even didn't know what the risk would be. We didn't experience a big financial meltdown. We didn't experience the Great Depression, and people, just the first generation of the business people, of the bankers, of the service sectors, very easy, I would say, for the developing country. Think back to 200 years in Europe, when the early stage of the market economy, and it's very easy to get into this cycle, bubble bust and then crisis. So I think we are learning all the lessons from the history, from other developing countries, other developed countries. Try to be cautious and try to be put the regulation in place, then follow up with more opening up.
So will China be looking to what the US does in terms of regulation, or is it going to go its own way?
It's learn everybody's. I think as a developing country, that's a kind of the advantage. You have all the good experience or bad experience, all the lessons, and a lot of lessons are actually embedded in those regulations. So that's we learn. And most policies making in the process, actually, people just ask what this country do, what that country do, what Hong Kong is doing, what Singapore is doing, what the US, what Europe. So that's all kind of the learning curve.
You've avoided a financial crisis up to now. You weren't affected by the Asian financial crisis of the late 90s. And that's mainly because of the huge reserves you've got.
Yeah, well, now not only the reserve help people to have the credibility or the confidence, but basically because we didn't liberalize the financial market too quick. Liberalize the market before you are ready, before all the other institutions are really compatible with more liberalization. Your legal framework, their property rights, your regulatory framework, your banking themselves, the financial institutions themselves need to be matured. Then you need to have more regulations about the capital flows and to manage the exchange rate. All those things matters. I think some developing country got into this financial crisis. For example, the Asian countries in late 90s, some of them just because, under some kind of advice, they open before they are ready to open. And then they expose themselves. Of course, you got more capital inflows, and that's boost your growth, but at the same time expose you to the risks which you are not able to handle. So that's, I think, we need to make a balance. We are moving to that direction. That's right. I believe China, even now people say, well, a lot of banks still state majority banks are still, government have a lot of the control. But things are moving to that direction, more market oriented and more private ownership, more joint ownership, or whatever. But you have to recognize when you are in the early stage of development and the institutional transition, you have to be cautious about the financial risk. If you open too early, premature, and to not able to handle your system, not you. one person or one regulator. It's about system. Whole system are not able to handle. Then you get into trouble. That's what we learned from this Asia crisis.
There had been some concern for a while back that there could be a banking crisis within China.
Right.
In some ways, basically the Chinese government has bailed out some of the major banks as they went for IPOs. Billions of dollars poured in. Is that not in a way, though, papering over the cracks?
Yeah. Well, China that time did was actually basically the same thing what the U.S. now doing with their banks, their investment banks. Put the bad assets aside or out of the balance sheet of the banking sector. They're the main banking sector to work, to take off the burden of the history. Then start to work, and then to manage to deal with those bad loans separately. It's similar to what U.S. put the toxic asset aside their balance sheet. But one thing, a difference is that 10 years ago, say now 12 years ago, when the Asia financial crisis broke up, and even before that, say 15 years ago, Chinese commercial banks were not banks. They were government institutions. They were run by officials, and they were not have the sense of the commercial profitability. And no one really looked for the profitability. And the government took them as a second pocket, central bank, local bank, and local government particularly. So it's a kind of history. It's kind of the I would say, early transition period problem. People didn't realize if you really want a bank, you have to have a bank regulation. You have to be bank to be a bank, not a government institution. So before we didn't realize that. So that make the bank at that time have the excuse. This bad loan is not made by us. We are made these loans under your order, your command. So this was a legacy of an old command economy. So then, government have to do this with the reforms. I take this away, but you have to have the reform. You have to be consolidated, and you have to have a goal of privatization. Say even partial privatization. Say now some big banks are 30%. If partial privatization, you have to change, and you change your governance, corporate governance, and you change your structure of the board. So that happened, and that's a new phase of China's banking sector. So that's the special issue. I would say we should recognize. This is history. This is a history of transition from a planned economy, command economy, to a market economy. It's still not yet a full market economy, but it's moving in that direction.
Are you saying that the banks are in better shape now?
Now it's a better shape and more profit-oriented, more risk aversion, I believe, and better regulated. Before, no one check. Today we talk about check your leverage, check how much loan you made. Before, no one check. As long as the government said you should make the loan, they made the loan. But now people check with those loans. People check with the risk. There is a premium for those risks, and people really put a significant amount of their profit every year for those kind of the risk management. So I think it's a much better look like a commercial bank, and under quite a restrictive regulation. Sometimes we even said that maybe we are too cautious. We are too much regulation, and we needed to liberalize further. But I believe that's what go on. When people have better regulation, people will be more confident to allow the banks to do more in the market competition.
And when do you think the RMB will be fully convertible? Because that's also part of the liberalization.
Yeah, but that's that's all, not only the renminbi itself. That's related a lot of fundamental issues. how your capital control, how your capital account to be liberalized, how your management of the financial flows, and how matured your both the banking itself market, financial market, the security market, that kind of stock market and the debt market matured, and how your regulatory framework is really ready. So many institutional issues as a foundation for your convertibility with a manageable risk. It's not the only convertibility issue is about how much risk you are facing when you have this convertibility. So I don't think I know when.
And has the timetable been set?
I don't know there's any timetable, but I believe that China is still moving on the path of this the capital account liberalization, because capital account liberalization totally involved 14 categories of the financial capital transfer, capital transaction areas. In some areas, China already liberalized. China now, the current account is already liberalized, and some is partial, some just start. But I believe the things are moving toward that direction. With this huge reserve, I believe Chinese are more confident, and the more the too big reserve is not a good thing. It's a risk itself too. When the dollar depreciating, but people are looking for more freedom of the capital flows, and I think it's not infinite, but I don't know if there is any timetable.
You spoke about 6 months ago about the state of the Chinese economy and saying that maybe a year or two before it comes out of the valley, as I think you put it. Do you still think that given what you've seen over the past 6 months?
Yeah, I think that it's on the way, and it will continue on that way of recover and back to normal growth. By normal growth, I'm not meaning it's back to the two-digit growth. That's for me it's too high. But if you're at 8-9%, but not too much depend on government investment, but depends on different kind of demand activities. What I mean by normal. At the moment, it's still very much dependent on the government investment, the stimulus package. But it's a normal in a crisis time. Every country now is a similar thing. But I believe next year, more market forces will play a role. In 2011, I would say we're back to normal.
Fan Gang, prominent economist in China and member of the central bank's monetary policy committee. Thanks for joining us.